Hey, Tony Alvino, man, I'm so thrilled to have the opportunity to sit down with you one on one. We see each other every single week or damn
Mhm.
near every week because you've kind of stepped back from your roles with Central County Marketing Group. And I really just am very grateful for the opportunity to get to know you a little bit better. You took the time to share a biography with me. And I'll kind of hit the highlights here. So you've got about 15 years in the insurance industry.
Yeah.
You were a claims adjuster early on, and you did a bunch of stuff with, underwriting and captive agency, et cetera, with a couple of major carriers. Now you're with a multi-state broker. You're all about taking care of your clients. I see that with the work that you've done with the volunteer organizations. Um, I'm looking at your bio and it says you were a HUD certified housing counselor for the United States Navy. Did you serve in the military?
No, I didn't. During the foreclosure epidemic, I actually ran a nonprofit with some family and some friends, and we were across the nation. We were in New Orleans, we were in Baltimore, and primarily based out of San Diego. So with our work, we actually got hired with the Navy as a outside consultant, and we did foreclosure counseling for enlisted and civilian personnel.
Awesome. I love it. And I'm looking at your bio. It says that you were bestowed a Congressional Recognition Award for your outstanding service. So thank you very much for what you did there. Really pretty impressive biography. You continue to craft your knowledge, experience in the industry by obtaining a Chartered Property Casualty Underwriter designation and earning another bachelor's degree in risk management and insurance from the University of Colorado. You also happen to share a love of mine, and that's food. If I'm not mistaken, you actually have a culinary sciences degree as well, right?
I do. That was plan B. I plan, actually that might have been plan C or D, to actually be honest with you. I had a prior plan, was going to go into law enforcement, and I had a training sergeant, and he went, this is your plan A. I hope you have a B, C, D, and E, because not all of you are going to make it. And
and even if you do, even if we have a bunch of family who are either currently in law enforcement or have retired out of this of the line of duty. And the challenge is, that it's a very physically demanding, mentally demanding business to be in. And have had a couple of family members that have retired out on medical injury, unfortunately. And so, to your point, like, if you're going to go into that line of work, like, you better have a backup because it's not an easy job to be in. So
high burnout rate. So I grew up in a restaurant. My grandparents had a restaurant. I basically lived in that kitchen, so it kind of came natural, but I still enjoy it.
Well, wonderful, and I'm grateful to get to know you a little bit better. Married for how long now?
Going on about 10 years. We've been together for almost 15. So been together pretty much every single day since we met. So
amazing. You got a beautiful daughter. And got a picture from you a couple of days back. You were hiking up in the Canada Rockies. And was it the Rockies or?
We were just outside of Vancouver. We one of the things that my wife and I, she's from a very small town in the rural upstate East Coast, and so one of the things is, as kids, you really don't get to travel a lot, but that was one of the goals is for our daughter is we're going to take you places and you're going to learn things, and you're not going to be sheltered. You're going to see the world. You're going to experience stuff at a very young age.
Absolutely. We share that same philosophy. Our family has done quite a bit of traveling as well. And it has changed both of our children forever. I mean, there's just no two ways about it. So I love that you seem to be enamored or were drawn to Canada? Because it's the second time I've gotten a picture from you while you were on vacation in that part of the world. What's the allure to Canada?
For me, and I think this goes back to my dad, is that, he was a big hunter. He's former Navy himself. So I think that's where like the military background comes from, the love of the Navy, the love of the Corps.
Yeah.
And, he was a big hunter. He talked about, going to Colorado and Montana and going to all these places. And, I wish I got to Alaska. I never did.
Mhm.
Right. So that draw of him, and I guess kind of fulfilling a little bit of that wish, but I just love it up there. I mean, the fresh air, the water, the people, slower way of life. I mean, I'd love to build a cabin out of, some timber and have a bunch of dogs running around. And
let's jump in. Let's jump into the insurance business there real quick, just on that note, because I just was talking with somebody about log cabins are very difficult to insure. Why is that?
It's fire risk, right? The risk of fire, wildfire. I mean, that's the big thing, right?
You're not generally you don't have a log cabin in town.
No. Generally, you don't have a log cabin in town, but it is that concern, which is the new insurance word being thrown around, is the concern of this
elevated risk.
Elevated risk. And especially after the massive amount of rain we received just this year, now it's not just wildfire, but now it's the risk of flooding and the risk of this.
Right.
So,
well, we have two seasons here in California, right? Fire and mudslide.
Pretty much. So, I'm waiting for which one's going to come first.
Yeah. They seem to overlap, right? You kind of run from one season into the next. So I'll be interested to see how this. Although we actually got a reprieve from fire season last year. It was actually pretty mild by comparison.
It was. I mean, it was unfortunate with the car fire and a bunch of the other stuff that's way up north that kind of hasn't been on fire in decades, if not 100 years. I mean, there's people that we know in this industry that have their friends or family have lost homes up in near Tahoe or outside of Redding or wherever the case may be. But I mean, it's all cyclical. So
and I want to talk a bit. So carriers are in fact becoming more particular about who they're going to insure.
Yeah.
We're beginning to see more and more in the foothills split policies where you've got only a couple of carriers that will do your baseline insurance, and then the rest of it is picked up by Fair Plan. So talk to me a bit about like how that works, what the mechanics of it are, and I'm asking you that question very specifically because here where we live in the East Bay, we're surrounded by open space. And I wonder, are we going to run into some of the same issues that we're seeing in the foothills here, as we look at communities that are right on the edge of these large open space reserves?
I'm going to say yes, we are. To touch on that, I'm kind of running into some of that now, so we're, centrally located between, Oakland and Fremont. And if you're listening to this and you're not from here, we're just right outside of San Francisco. Well, in some of that little areas just outside of us, there's a lot of open range spaces. You got outside of Mount Diablo, San Ramon, Dublin, Danville.
Here in Castro Valley, and my house is 2 blocks.
Here in Castro Valley.
Yeah, my house is 2 blocks from a 4,000 acre open space reserve.
Yeah.
And we've had a couple of incidents there. I mean, when I was first moved here in 2003, not long after, we had a small fire on the hillside above the house, and the fire planes were coming in so close I could see the guy running the airplane coming over the top of me. It's definitely a real possibility.
It definitely is a real possibility. And in some of those, they're just, the risk is starting to become too great for them.
Yeah.
Whether it's density, there's now new density within housing. I mean, look at how much the city of Dublin has grown in the last 10 years. So you've got all these little mini variables that just add up, and over time,
yeah, density plays a role, right? So like you can go up and down the peninsula, for example, along the El Camino, and there's high density development after high density development, et cetera. And that's twofold, right? It's profitable for those builders to build those kind of dwellings, but it's also more cost effective for folks to rent something like that rather than purchase. And so high density housing is definitely become more and more a part of our overall housing policy and plan. So that has to be weighing pretty heavily on the way we evaluate risk as well.
Yeah, because if you're squeezing 500 people in a space, because now you're going vertical versus 10 families or 10 single family homes, how it used to be.
Yeah.
So now you might only be dealing with 50 or 60 people versus now potentially 500. Well, those people do have to get down.
Yeah.
Things start to bottleneck. So I understand that. And I think each carrier looks at things a little bit different. Everyone is not on the same page. Like, say as an example, your big three, your Farmers, your State Farm, your Allstate, they might be good right now on rates or things, say in this year.
Is that what you would call, curious, is that what we would call a surplus line, or is that a different?
No.
I don't know the terminology. Maybe you can break it down. So like in my line of work as a mortgage banker, we have the big banks, we have the independent mortgage banks, and then we've got brokers. And so in that same categorization, do you have something that is similar?
Yeah. So, we'll have like the big banks, right? Your State Farm, your Farmers, your Allstate, Safeco, Travelers, the guys
those would be considered your bigger carriers.
Yeah. Those are your big carriers. Those are usually like all within your top 10. But then you have something called surplus lines, and those are the guys that kind of take that risk that may not fit in that category for the big guys.
Let's drill in there. I want to dig in on that specific thing, because that's an important point, because it's the uniqueness that's going to put you and set you apart.
Correct. So your Oakland Hills, your Berkeley Hills, Malibu, right? LA, the places that are either way too expensive to rebuild, or that value of the reconstruction or construction of that home is too great for State Farm or Farmers. And
so what's the cutoff point there? What's the cutoff point there? I mean, is it uniqueness? Is it dollars? Is it something else?
It's a little bit of everything, right? Area, how accessible is it to, by EMS, and location, obviously, zip code, construction style, size. We did one in Oakland Hills that was 3,800 square feet, Tuscan Villa-esque, but it was up the ridge and down. And I had to actually went over to the fire station. It was like, how do you get down here? Because the insured wants to know. It's like, well, we have multiple small trucks that we hook up when we drive down. We can't get anything big up here. Everything is fairly small, but we could still be there within 6 minutes. We're like, okay, understood.
Can you mitigate some of that risk on your own as a homeowner? For example, let's say you had your property piped, with 2-inch pipes, that could create enough water flow for you to create defense until the big boys show up. Is that something that you do in order to sort of mitigate some of the expense behind the policy?
Yeah. So not just on that, but a bunch of carriers, so in this case, it's a surplus line because of value and location and size. They were willing to take on this property, but they had requirements. Monitored smoke fire alarm by an actual company, not like a internet or Wi-Fi based. Like they wanted, someone
like a life alert, like a life alert for a smoke detector.
Right. Like out here, I think it was like Bay Alarm or ADT or something along those lines.
Okay.
They had to have fire sprinklers in the home, which during construction
so the house
they
had
put
to
in.
Be so the house had to be piped for inside fire system suppression system.
Yep, this one did.
Okay.
Not all of them have it, especially if the house is older. It's like, well, I might as well remodel the whole house just to throw in, so that's just not going to happen.
Yeah.
But defensible space. They wanted more defensible space. So depending on carriers, so many feet. But because of the location of the Oakland Hills, they're like, we want 100 feet plus. Like, we want you to cut everything back as far as you can.
We've talked about this as well, Ben. Like I've overheard you speaking to other people. Like you are a full service broker, insurance writer. You have on a number of occasions gone out and taken 100-foot tape and gone from the house to where the closest fire hydrant is and said, okay, the closest fire hydrant is X number of feet from the front door.
Yep. I just did that for a good friend of ours. You've mentioned his name, Aaron Moore.
Yeah.
I went out there for his aunt who's out in Woodside, out near the area where you grew up. And if you know that area of the peninsula, it's highly dense forest.
Not only that, but with Woodside, it's full of eucalyptus, which is like
highly flammable.
One of the worst, unfortunately. Yep.
Yeah. Yep. That, old heritage oak trees. And that's exactly what we had to do because the carrier that she had was no longer going to write in California because of the risk. It was just too great. They might have had just way too much in their portfolio. And, if something happened, they could have, basically kind of went bankrupt. So they pulled out. I got the call, so went out there. And usually in cases like this, underwriters want to know everything. And you know how it is, right? Picture speaks 1,000 words. When you give them 500 pictures, you got every word in the dictionary to make the decision that this is like, it's going to be a safe risk to insure. But we had to do the things where we got out there with the, the little measured wheel, and I walked from the property driveway all the way down one side of the street to find the nearest fire hydrant, and walked all the way back down the other. This is where we're at. This is how fast it's going to take. Where's the nearest fire station? Okay, it's 1.4 miles away. Go over, talk to the fire captain. How long does it take you to get there? What do you have? What do you do? Okay. Why do you want this information? I'm an insurance broker. I'm just trying to figure this out.
Yeah, this is this is the kind of service that you're going to get from, from somebody like yourself who's committed to his clients. I'm not going to name names, and I'm not asking you to either, but not everybody in your line of work is going to take the same care.
No.
In fact, there might be an agent or two. I know certainly in my line of work as a mortgage banker, that's too much work. I don't want to deal with it. And there'll be excuses or not return phone calls. And, I think everybody deserves to be taken care of.
Right. And of course, if you've got like a huge agency and, you got 5 or 6 producers and, you're, as Tim Dimbo said in another one of your events, is you're working too much on or in the business than you are on it.
Yep.
Then, you're doing a lot of managing, or you're doing a lot of stuff like that. Myself, we're a much smaller brokerage. There's two of us, and we're more of the concierge type.
Yeah, and that's the
We're
difference, right? Like that's like,
yeah,
I always tell my clients, and I think you run kind of the same philosophy, you know, you want discount service or you want, Nordstrom service. Because
yeah,
there's a big difference between the two. And I always say, and I'm sure you would probably agree with your line of work, like I'm not going to be the cheapest one out there. I'm not going to be the lowest rate because that's not the place I play. I play a little bit further up the line, and I'm taking care of people because just like your business, my business is based on referral. And if I take care of somebody, then I'm guaranteeing myself the opportunity, not necessarily that I'm going to get it, but at least the opportunity to be referred.
Right. And that's how we are. We're more of a concierge referral business. We do really very minimal social media. We're not on Twitter. We're not on TikTok. We have Instagram. We barely use it. In fact, I think I use the CCMG Facebook group page more than anything, and I don't even use that.
Yeah.
So, are we, like another friend of ours, Claudia Kim, are we a problem solver? Yeah, we are. We usually get that because someone else, hey, I can't do it anymore. Can you do it?
Yeah.
Maybe I have to look.
Yeah, this business that we're in, real estate, insurance, mortgage, barrier to entry is pretty low, right? So like it doesn't take you get a license, you get a real estate license, get in personal lines license, which I had for a period of time, get a mortgage license, and you're in. So, getting into the business, but becoming proficient at what you do takes a while. It takes commitment, and it takes follow through, and it takes education, which both of us are big on. Yeah. So let's talk a little bit about some of the education that you have been recently undertaking. You mentioned that floodplains are going to be reevaluated by FEMA and carriers in the coming future. So talk to us more about that. We're just on the tail end of one of the rainiest seasons we've had in California in about 12 years, maybe longer,
if not ever.
Yeah.
Right.
And we certainly have, Sierra snowpack is at a 27-year record at this point, I think, if I'm not mistaken.
Something like that. Yeah.
It's crazy that the amount, they're talking about 700 inches or something like that, which is insane.
Yeah. So I was actually looking up something. Do you know that the city of LA or the county of LA and San Diego had more rain, each one of those cities, than Seattle? Right?
Wow. Wow.
I like I said, we touched on this. I love the Pacific Northwest. Amazing up there.
Yeah.
It's wet, it's rainy. And when I was looking at that, I was like, wait a minute, are you serious? And it was like, it's just by a couple of inches. But I'm like, at some point that water has to go somewhere.
Yeah. So, we have a phantom lake in the center of California that's reappeared, Lake Tulare.
There you go.
And there's a bunch of property that's at risk, farmland and otherwise, personal property as well as agriculture, that is going to be severely impacted by this water flow.
Oh yeah.
We haven't even started the party because all that snow in the Sierras has got to run off somewhere, right?
Right. And for someone who writes insurance, personal lines, commercial, life insurance, everything throughout the state and a few others, you write a homeowner's policy in Modesto or, Patterson or so, out in that little Central Valley area. And it's like, hey, they're requiring flood. I'm like, why?
Right.
Why? Right.
Because all of a sudden,
this is the reason why.
Yeah. All of a sudden they have flood issues where they haven't had them for 100 years.
Exactly. There was that little town south of Gilroy that was flooded a few weeks ago for, what was it, like 7 to 10 days, where, it took almost 2 weeks for people to come back, to their homes.
Yeah, the town is Pajaro.
That's it.
Pajaro and Freedom, which is right in the center of Pajaro. because they had a levee fail.
Yep. So, I mean, look at what Hurricane Katrina did to New Orleans.
Yeah.
Right. Yeah. Yes. It's underwater. Yes. But, the levee fails, or when it breaks,
Yeah. All those houses that are in the ninth ward are now on stilts.
Yeah. Yeah.
If they got rebuilt, right?
If they got rebuilt. And I visited there after. And it was.
I know you worked down there after Katrina. I did a fair bit of business in a previous line of work in the New Orleans market, and spent a lot of time there and got to know a lot of people in there.
Mm-hmm.
And when the storms came, a lot of them got displaced, and I was able to meet up with a couple of them afterwards and heard some of their stories, and this is a couple of years after, and they were still very emotional about it. Like the one guy said to me, I didn't think anybody was ever coming for us.
Yeah.
Which was like, that's really unfathomable if you ask me, but
yeah, it's sad. And, the whole goal with this is, to learn from the mistakes and do better. California never thought that they would get this amount of rain.
Yeah.
Ever. I know I didn't. I've lived here most of my life.
Yeah. Yeah. It's amazing to me, I don't want to go political. And as the minute I say climate change, people are going to think this is a political conversation. It's not meant to be, but I do think that there is some of that's at play here, and I wonder, with the natural disasters, with the increase of inclement weather or unpredictable weather, as the case may be, how much is that going to impact what insurers are going to require for us to carry in terms of coverage? Are they going to start to are they going to start to throw more of that risk back on us?
Probably. That's just, assume the worst, right? Assume that we're going to have to take on more. Assume that we'll have to do things. So, like, as an example, when you go to buy a home, right? You're funding the loan. They get fire, they get theft, they don't get earthquake. That's separate.
We don't require it. Not today.
Right. You don't require it today. You don't get flood unless it comes through from the national hazard disclosure that, hey, you're in a floodplain.
Yep.
Which then the bank is going to be like, nope, flood. Yep. We need to.
And by the way, like, the bank runs its calculations right out the gate. Like, there is a tax and flood cert that's done immediately. Like, as soon as we get a deal live, we do two things. We check to make sure that the taxes are current on the property, and then we make sure that the property's on the flood zone, because those are the two main risks for us early on in the process.
Right.
Yeah. So
right, so before you had just the NFIP, you had what FEMA was going to give you, but those are expensive, right? Depending on where you're at, those could be a few $1,000s a year.
You're talking specifically the FEMA policies that are available where we won't get coverage elsewhere,
right? But thankfully, that there's now some private. Some private carriers that all they do is catastrophe, right? You can't afford the FEMA flood, you can't afford the CEA earthquake, but you know what? They might come in at 20% less. It might be a little bit, softer on the wallet, but at least you got some kind of coverage. And before certain.
Let's talk about that for a second. I'm going to ask you a question about earthquake coverage. So, here in the San Francisco Bay Area, depending on the market and the town that you live in, oftentimes the dirt is worth more than the sticks.
Yeah.
Right?
Yeah.
So right now, that's my situation. My property is valued at more than $1 million, and I know it wouldn't cost me $1 million to rebuild it. So therefore, my dirt's worth more than my building is.
Right.
And, we've been in this house for a while, so I'm not going to say it's paid off, but we're getting closer and closer every day.
Mhm.
You know, I was talking with another agent sometime back, and he had shared with me, and I wonder what your thoughts are. When you get to a certain point in your ownership position where you maybe own more of the property than the bank does,
Mhm.
it's perhaps worthwhile to have an earthquake policy. So when do you, as a provider of insurance and an advisor to those looking for the types of insurance you sell, when do you
Mhm.
say, hey, it's worth maybe looking at an earthquake policy?
I do that up front.
Yep. Yep.
Period. Because if you're telling me like, hey, I'm buying this house in Hayward. Oh, by the way, the fault line's like a half a block away, and be like,
Mhm.
you're gonna get it right now. Like,
Yep.
why? So because there's a solid chance, your house is gonna slide off the hill.
Yep.
Then there's other places, like if you're, at a client who moved from Hayward to Brentwood, and he's like, hey, I still want that earthquake insurance. I'm like, cool, it's going to cost you like 1/64 of what your old place was. But he's like, I still want it.
Yeah.
Like, oh, good, you should. Obviously, the closer you are to like a major fault line, right? The more likely you should have it. Just like if you bought a house on the coast, you should probably have that flood policy just in case, the tsunami comes.
Yeah.
You should have that, right? Be the same thing if you said, hey, I'm moving up to, Pollock Pines or Arnold, or, just right in Amador. Do you think I should have this type of, fire policy? Yeah, you really should.
Yeah,
So,
let's go back to your Oakland property. I know you've insured some properties that are up there on the side of the hill above the tunnel.
mhm.
We were talking a little bit about what the insurance companies require, and then we're jumping around a bit here, and I apologize for that, but you just kind of made me think of it. When you insure a property that's on the side of a hill, I mean, are you having to do soil samples? Or are you having to get geoengineering
No,
involved or any of that stuff?
no, I'm not. It's usually, the insurance, they want all the pictures. I provide them how, like we said, how close the nearest fire hydrant is, how far away the closest station is. I give them, like a Google Maps of like, here's the fire station, here's the house, this is the route they usually take. According to Google, it says it's X amount of miles, and this is the response time to drive from here to here. I give that.
But
I bought
beyond
a drone.
beyond that,
I bought a drone
yeah,
so we can fly it up, and so you can do an aerial, because Google Earth isn't always current. We make sure there's defensible space. We take pictures, but if they want soil samples, that's usually out of our league, and they usually don't really ask for anything like that intense. But if they do, I know a geologist. I'll just reach out to him. But outside of that, like, they're usually like, how fast can they get there? Do they have this? Do they have that? Very preventive type, services. But if there's a house on stilts, pretty sure like most of them aren't going to do it. I'd have to go to like a very different market outside of that. And that's like the Lloyd's of London, where they'll insure it, but you're going to pay for it.
Yeah, I have some friends who have property up in the foothills, and the policy that they're paying for now relative to what they paid for the property is pretty excessive, in my opinion. But, when you're insuring the most important asset that you own, like, you definitely don't want to go on the cheap, right? I mean,
well, right. And this brings up, one thing where, I was talking to another friend who's in insurance. And he goes, it's surprisingly how many people have insurance on their phone, but they don't have insurance on themselves, or not enough on their property. And I go, well, yeah. I said, well, let's look at this. It's like, you ever be driving down the street and you see like a really expensive, luxury car, like a classic car that's been like fully restored? I was like, if you start going down that rabbit hole, you're like, man, like, I wonder how much it'd cost for this vehicle. I wonder how much, the payments are. I wonder what that person does to afford that. Well, if they can afford the car, they can afford the insurance. Okay, you're buying real estate here in the Bay Area. It's extremely expensive now.
Yep.
It's one of the most biggest financial, assets that you're purchasing, but people are going extremely cheap. Like, you are highly underinsured, but you've got insurance on your phone, but not on your house the way you should.
Yeah, believe me, I see the policies, not on purchase, but on refinance. Because on purchase, we're going to insist on an RCE. We're going to insist on, the calculation showing that the insurance that's being provided is sufficient to cover a loss. The bank is going to want to be protected. So that initial policy has to be of a certain size and value based on our needs. Go ahead.
Yeah. So let's go on that, right? Yeah. You refer me a client. I look at it as one, that client is now my family. So I'm going to make sure they're insured the way they should be. Two, when I look at that property, I look at it like I'm buying it, right? I want to make sure it's properly insured the way it should be. And I see some clients that are coming from that refi, or they're like, hey, we're switching, and I'll look at what that current policy is versus what it should be. And I'm like, you're severely underinsured. By the way, your current policy doesn't even have the right information.
Yeah, it's really funny, isn't it? Like, it's crazy the way that these things get so off track over a period of time.
Yeah, it is. And, I understand some stuff where it's like, we've lived in the house for 20 years and, we remodeled, we did an addition, we did this. It's like, okay, but did you update your insurance? Well, I never thought to. Well, I called the guy and he just like, okay, don't worry, I'll take care of it. Or, oh, we got it online, right? Geico, Liberty Mutual, whatever.
What are you, like, I'm curious when, I know what our policy is, and I know, what I see with other policies that have, on properties are about the same type, size, and style as ours. We're probably about 125 to 140 bucks a month on our insurance policy, and occasionally I see people that are, they come in and they're $65, $75. And I look and I'm like, and that's one of the very first things I say is, listen, looks to me like you might be underinsured. And there's always well, what do you mean by that? Or I'm puzzled, whatever the case may be. Most people are looking at what's the monthly payment, not what is covered, because nobody ever wants to think about what happens when you have an insurable event, right? That's
so
that's the concern.
That's the thing, right? So we look at, there's usually two things. It's, well, I can't afford this, or yours is too much.
Yeah.
Like, well, you're properly insured here versus over here. And it's like, well, I'm buying this house for $1 million. Why is my coverage only for $550,000? It's like, well, we're covering all of your stuff. The dwelling, right? If the house was to fall down today, how much is it going to cost you to rebuild?
And what are you estimating that number to be? I know there's some sort of rules of thumb. Some say $250 a square foot, which I think is completely ridiculous in this market. Some people say
so it all depends, right? Because you got to look at inflation. You got to look at cost of labor. There's all these other little small variables. It's not it's not uniform across the board, right? Because we can do a house for you in Chico, and it could be the same square footage, the same design, same style of your current house now, and it could be $500 cheaper because the risk is less, right? And maybe the materials is less. Versus if we took your same house and dropped you in Anaheim, it could be $500 more. Right. I mean, it all depends. There's all these little variables. So when you go to quote, it's another reason why you have to be accurate on that reconstruction cost, because it comes in kind of roughly pre-filled, unless you just had a policy and it was updated in the system, say within the last 18 months to 2 years, you might have a little bit more better reporting. But I've written policies on homes where they've had the same policy for 30 years and there's no data whatsoever.
Yeah.
So it just depends.
Yeah. Yeah. You know, shame on me. I used an acronym a minute ago, RCE. For those of you who are not in the know, that's a replacement cost estimator. And essentially it's an evaluation by the insurance company as to what it's going to cost to replace that particular property should it have an insurable event.
Right. Exactly. And you have to be accurate on it or you're just not going to get accurate information.
Yep. Absolutely. You asked a great question in the marketing meeting the other morning. I thought it was really perfect, and I'm not going to try to repeat it, but I want you to ask it, and then let's peel away the layers, because I'm a big one. What got me is the words generational wealth. So that's the tease. So take us into the question that you did.
Okay. So, you know, I've been at the marketing group for almost 10 years.
Yep.
And so, you know, most recently, especially with, you know, because of COVID and other stuff like that, you know, people are talking about building that generational wealth, right? People are saving more. There's more programs to get people into homes now. And it's how to build that generational wealth. And so I asked a simple question because I was thinking about it. I was talking with my insurance broker. Love these guys. I learned so much from them weekly. And he's like, you know, how much are you writing, you know, for life insurance? I'm like, we're doing pretty good, right? And I said, you know, he was like, okay, at least you're protecting them. I'm like, yeah, I am. Then I started thinking about this generational wealth because there's all these seminars and all this. And I was like, how many of you guys are actually talking about protecting it? So I asked that question on Wednesday. It was like, you know, how many of you talk about, you know, building generational wealth with your client?
Every single time I talk to a client about getting pre-approved for a home loan, that's one of the first things I talk to them about is, you know, this is the fastest way to generational wealth in this country.
Yes, it is. And so with that, then I started thinking, I was like, okay, well, how many of you are homeowners and you talk about this as real estate professionals, lenders, et cetera, et cetera. And then we got into like, well, how many of you, you know, can pay off that mortgage with the money you have in your bank? And some hands went down. It was like, well, how many of you, you know, you're the sole or, you know, primary or, you know, partial salary that's going to go to paying off that mortgage? Hands went up, some went down. I was like, how many of you guys have, you know, some kind of security, whether it's like a, you know, liquid funds or a life insurance that will pay off that mortgage, keep folks in the house and, you know, allow them to live that lifestyle or mourn, pay for the kids to go to college, you know, for the foreseeable future. And like only 2 or 3 hands.
Small number. It was pretty surprising. It was, you know, Robin and I both have life insurance policies, and you know, they're nothing fancy, but it's the safety net, right?
Yeah,
it's the thing that lets us sleep at night.
Right. It's absolutely it's something. Yeah. It doesn't have to pay off everything. It doesn't have to be millions on millions of dollars. It's enough to have, you know, to keep the roof over their head, you know, food on the table and the lights on.
Yeah, I'll tell you, one of the things that, you know, that I was intrigued by, like, so a lot of us are sitting on a pretty sizable amount of equity.
Yeah. Right.
And so the question becomes, you know, how can you tap into that equity to create some security for yourself? And
right.
You know, the answer is, you know, it's possible that you could, you know, draw out some of the equity on your property to create an annuity. Could be throw out some, equity on the property to create long-term care coverage. Right? There's a few
Mhm.
things that you might be able to use your equity position, other than buying a new car,
Right.
putting a kid through school, which, by the way, no judgment on either one of those things. It's your money. Buying a second property or an investment property
Mhm.
with equity, why not invest in yourself too?
Right. I mean, so if we think about it, question to you, what's the greatest asset that you can have outside of buying real estate?
I would say, immediately what comes to mind is peace of mind.
Okay. How about the ability to earn a living?
Yeah.
Right.
Yep.
I mean, so whether that is getting a life insurance policy with long-term care and disability built into it,
Yep.
right? I mean, the whole point is if you in your earnings have or pay any portion of that mortgage or, or rent, you need something, because the day that you don't come home, one is the day your family loses you, which is highly unfortunate.
Yeah.
But that income goes away.
Yep. Yep.
So even if you're hurt at work, or like myself, I work for myself. If I'm hurt and injured, I don't work. My
Yep.
kid doesn't eat.
Yep.
The roof.
Having some kind of disability insurance other than what
Mhm.
comes from the state of California or the federal government.
Right.
Those policies are relatively affordable.
Yeah, and obviously, so another good example, so our other good friend, Genoa Anguiano, she's got that thing about, get social. Hey, you look what you look like, so get on camera and do it. Well, it comes to life insurance, things are a little bit easier now. And I think, COVID kind of pushed some of that transition. There's a lot of carriers now where, like, okay, you've had cancer, you've had this, okay, what kind, how bad, how long ago, you're still insurable.
Yeah, it's interesting you say that, because there's a great point that's made there. Like, you may be thinking like, I can't get insurance, but like, you are,
and I think
you have what you have. Go and ask the question, find out whether or not you can be.
Yeah, and and so I think it's that old stigma, right, from like the 70s, 80s. Like, you got to be in perfect health to get it. It's like, well, the better health you are, the cheaper it is. But as my life broker said, he's like, hey, everyone's on blood pressure meds, everyone's on cholesterol meds. It's standard now. He's like carriers, like, some of them, okay, cool. You smoke cannabis, it's legal in these states. We kind of don't care as long as you're not Cheech or Chong. We don't care, right? You might have to do a small paramed exam. We'll check your DMV record that you don't have DUIs, you have no criminal record, you're in relatively good health. You're not going to die in 6 months. We'll insure you. It might be $20 more.
I had a doctor tell me, I was having my first physical. I think I was like in my late 30s, and we got done with the exam, and he said, pretty good. He said, probably a really good time for you to think about getting life insurance.
Yeah.
And I didn't at the time, because I was invincible, right? As we all think
we all are. We all are, until that first injury or until that first scare. And you know what? It would. So as an example, right, COVID brought that out. It got a lot of people thinking like, wow, like, here's a pandemic that no one doesn't really know or understand what's going on. This is the beginning. And it's like, I need life insurance. Cool. Well, probably within the first 3 weeks, we are blowing up. Right? Cool. Let's see what we can do.
Yeah.
Here's the problem. Yeah. No one is there to process it.
Right. So great. So, everybody's thinking about it, but now there's nobody to come out. Because like when we had our life insurance policy done a couple of years before the pandemic, you know, she came to the house twice.
Yeah.
And first came blood pressure, weight, height, measurements, all those things were done, you know, as part of getting the policy. And then, you know, I'm not gonna lie, like the questionnaire was extensive. Like it took me
Oh, it is.
about an hour and a half, I think, to get through all of the different questions, you know. But the nice part is once you do it the one time, that's it. I haven't seen it since.
No, and so, you know, like the good thing about it too is, you know, you can pay for coverage while you're in process to get approved, right? So you hand over that check, like I'm paying while I'm getting it done, you know, so I have some kind of temporary coverage until I'm approved. You have something. And, you know, I would say the one good thing of the pandemic was that it forced carriers to, okay, we need to automate this. No more 37 pages of filling out docs and doing all this stuff. Now
we've got a lot more efficient. All of us have.
and it's great. And it's literally like, okay, we're basically going to fill out an employment application for you.
Yeah.
I'm going to submit it. I'm going to take your payment. I'm going to send it to the carrier. They're going to pull all of your stuff. And then they're going to call you or send you an email so you can literally click, 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 yes, no, hey, I am on this, right? And as long as something is accurate, but if, you know, people lie, we're humans, right? I'm in the best shape of my life. Your cholesterol says you're 350 and you've got this, you know, if you tell me up front,
your biometrics say otherwise.
Yeah. You know, if as long as you tell me and you're not hiding something from me, you know, policies are getting approved anywhere between 3 and 10 days.
Nice.
Where it would have took 30 to 45.
Nice.
So as long as you're honest and upfront,
you're good.
It's done.
You're good.
It's done. But you know, if it's a special case, like say you're a former athlete and you just retired, say, you know, from the NFL, or, you know, you're cut from the NFL or whatever, and you're 6'2", 300 pounds, on paper, you look morbidly obese, but then when you go like, you know, this is who the client is, they were a professional athlete. Oh, okay, well, you know, it might take a little bit longer, but
compensating factors, as they say.
Compensating factors, right. So,
yeah,
you know, it is what it is. But carriers are a little bit more flexible on current conditions. I mean, there's even some, as an example, there's a policy called Vitality by John Hancock. If you're active, you ride the Peloton, you go walking, you go to the dentist, you do all these healthy things, they'll lower your rate as the years progress.
They give you a little discount.
They'll give you a little break, right? You play their little, you know, mind games and, you know.
Yeah, it's funny. We had the same policies with one of Robin's previous employers, and so like we would go and have our biometric screening done, and you know, all of that fun stuff, and it made a difference in how much we were paying on an annual basis.
Yeah, it does. You know, so the other big thing that I guess we'll call it personal pet peeve is when you talk to someone about it, and they're like, oh, you know, well, I have it through work, and I'm like, okay, one, it's not enough. Two, if you're no longer with that employer, you don't have it anymore. You got to have something that's your own, that you control, and you're not at the mercy of whatever, you know, whatever circumstances that fall under to get that full benefit.
Yep.
You know.
So we're right at the top of the hour. I don't want to cut you off, but I also want to make sure we get one last plug in for you and what you do as an insurance advisor. Let's do a quick recap. So you do personal lines. So that's going to be car, home, personal property. You also do whole life term and disability insurance as well, correct?
Yep. And we also do another thing, which is actually called life insurance buyouts.
Life insurance buyouts. Okay.
Yeah. So if it's very rare, not everyone can qualify, and it's like a very niche thing to where if someone say had a $3 or $4 million or even a $750,000 policy, and it's whole life, it's something permanent, not term, not 10, 20, or 30 years, and they don't have much time left, but they need the cash.
Yep.
There are state approved, entities that will, basically front the money so they can, enjoy the rest of their short time. And then,
Nice.
a little bit goes back to the investment pool. It's very rare. Not, like I said, not everyone qualifies, but it is an option, right?
Yep.
For people. And, I have access to that, but
well, this is
that's
why
another little thing.
this is why you and I, like, I'm a loan consultant, you're an insurance advisor. And so that's the difference, right? So, you are going to take your breadth of products, your depth of experience, and create a solution that makes the most sense for your insurers.
I do. And so, I'm not an attorney. I'm not a full financial advisor. Don't have all those other licenses. My business partner does. That's why we work well together. But also at the same time, I have a great team.
Yeah.
I have individuals like yourself. I have other individual assets in State Farm, Farmers, Allstate. I have other people for stuff I don't have. And we also have, a great support system with our personal line and business carrier. Shout out to Mr. Mike Mullins of Iroquois Group. And I've got two huge life brokers, the Greenberg family over at Total Financial. I'm pretty sure collectively they've got like 100 years experience. And then I've got the Brown brothers, it's Dan and Steve over in Chicago. They're the life buyout guys. Their dad started this company, I don't know, 50, 60 years ago. I mean, so I don't know everything. They do. So I call like, hey, I've got this situation. How do I do this? Or what could we do? You get them involved, right? They're my mentors, like yourself.
Yeah.
Like, I'm going to reach out and ask questions.
Yep. And rely on the resources that you have available to you.
Yeah, absolutely. Right.
Awesome.
When it comes to like the finance questions or the complicated life, right? I'll ask my business.
Bring in the experts, baby. Bring in the experts.
Exactly.
Yeah, absolutely. Well, good. Listen, it's been a pleasure, man. And while we spend a bit of time with one another each week, this has been really excellent, having the opportunity to dig in a bit deeper on what it is that you do in your personal line of work. And I'm really, really grateful for the opportunities to learn from you. Every time we talk, I feel like I walk away.
Yeah, same here. Even if it's like some of the most weird little thing about a motorcycle, I learned something new from Chris Park.
Awesome. Well, we talked early on in the conversation before the camera started about September being Life Insurance Awareness Month. Definitely want to be thinking about having you back in September when that month kicks off, so we can talk more about term and whole and other types of personal life insurance. Yeah, no, for sure. And so the good thing about it too is, say, like, even if you have a small business and you got a partner like I do, right? Key man policy. Yep. Absolutely. Good. I'll look forward to chatting it up with you at that point about those more specific types of policies that you offer.
Yeah.
I wish you a wonderful weekend, buddy.
You too.
Thanks.
All right. We'll see you.